Hooty-hoo, all my stock market gamblers. Welcome today. It's Monday, July 12th. Stock market's open. Markets are moving higher. Dow's up about 100 points. Nothing that exciting. Kind of the calm before the storm. I'm sitting on a lot of dry powder waiting for a better position to get in. What I want to talk today about is real estate. And now once again, I hate to be the bearer of bad news, but I really think we got a depression coming in real estate. Now, I know we've been at record highs here. We've been on a tear in real estate. Now, I'm a real estate broker. I'm on the front lines. I see all this happening. Look, the average price home in the United States right now is running about $350,000. It's up 23% year over year. Now, that's not normal. That is just a big crack up boom. I'm telling you. Now, what's interesting is rents have also gone up year over year, about 10% in most areas. Some areas as high as 20% increase in the rental market year over year. Now, this is just crazy times. There is no price discovery in houses. What we have is the government, the Federal Reserve, which is not the government, but they're buying $40 billion every month of mortgage-backed securities to prop up the housing market. But yet we say it's the best housing market we've ever had. Record high, record high, record high. Well, I'm still in the camp where we're going to see a pullback, and I'll tell you why. And I'll tell you why it's going to happen really soon. Look, at July 31st, everything changes. We're at July 12th, July 31st, everything changes. What changes? Well, that's when the forbearance stops. That's when the eviction moratorium stops. Look, you got 2 million people not paying their mortgage right now. 2 million homes that could come onto the market. That's crazy. Now, that's just crazy. Now, you got another 10, 20 million people not paying their rent. Now, landlords are going to be dumping these properties. They're going to kick the tenants out, and they're not going to want to be a landlord anymore. They're going to dump a lot of these properties. We're getting a shift in the marketplace right now. There is a market shift going on. Now, look at this fiscal cliff, the forbearance, the eviction moratorium, the unemployment. A lot of states have already ended the extra unemployment. The fiscal cliff is going to go like this, right? Okay, $350,000 for the average price home right now. Now, real estate doesn't crash overnight. Like the stock market. Stock market can go down 20, 50% one day. Real estate, no, it's not going to happen like that. Now, when I talk about a depression coming in real estate, I do believe that prices are going to come down by 50%. Now, check this out, though. It may not be nominal price. Okay, let's take a home that's selling for $500,000 right now. Let's say you could sell that home for $500,000, get out, get your money, and you got $500,000 of purchasing power. Now, what's going to happen if you wait just 1 year? Well, I think inflation's going to go up by 10% in that year. Okay, so you're 10% inflation going up, but the house price will come down by 10%. So what you could sell for $500,000 right now, you would be selling for $450,000, but 10% of that purchasing power would actually be wiped out by inflation, and that would bring it down to about $400,000. You will lose about $100,000 of purchasing power on a $500,000 house if you wait to sell it a year from now. That's just my opinion. Okay, but what if that happens for 5 years? What if it happens for 2 years? Okay, $500,000, you get 10% inflation each year, but your house price is not going up with inflation. Your house price is actually dropping by 10%. That's a 20% per year decrease in the purchasing power of the money when you sell your house. So that $500,000 house in 2 years could only be worth basically $300,000 of purchasing power. Okay, it doesn't crash overnight. It takes time to play out. These things take time to play out. Now, back in 1980, which a long time ago, I was alive then, many of you probably weren't alive then, but in 1980, you could buy the average price home for 800 ounces of silver. 800 ounces of silver would buy you the average price home. Now, this homes are at a record high, and it's going to start to decline. But silver is still cheap, and I think that's going to go up with inflation. I think we're going to get back to a place where 800 ounces of silver can buy you the average priced home in the United States. So let's just say a Silver Eagle right now is about $40. All right. So right now it takes about 9,000 Silver Eagles to buy the average price home. Average price home being roughly $350,000. A Silver Eagle selling for about $40. Now I know people say, hey Mike, the price of silver, it's at $26 an ounce. Yeah, you try finding it for that. That's the paper price. The physical price is still up $35 to $40. And I'm going to use $40. All right, so right now it takes 9,000 ounces of Silver Eagles to buy the average price home. Now, when this is done, when the depression finishes in the housing market, I'm saying it's going to take less than 900 ounces, probably around 800 ounces, to buy the same average price home. Now, maybe silver runs up, and but maybe the house prices run down. Okay, and it'll probably be somewhere in between. So would I be buying a house right here? No, I would not be buying a house right here. I think it's a bad time to buy a house. Now, granted, I'm not saying to go out and sell your principal residence, even though your principal residence is going to go down in purchasing power. I'm not saying to sell it. You need somewhere to live. But if you have rental properties, you might consider getting out of those. But what I am saying to do is maybe buy 800 ounces of silver and just wait for that to come to an equilibrium price where 800 ounces of silver will buy you the average price home in America. Okay, the average price home in America at $350,000 is just crazy high. All right, so the government, they don't want this to fall. They don't want it to fall because, well, it's just bad. They can't get their property taxes in. They have to lower the property taxes. They don't get the money coming in. They want to keep housing prices high. And that's why the Federal Reserve is buying these $40 billion every month of mortgage-backed securities. But what else are they trying to do to keep the housing market propped up? Now, this one's funny. Okay, so the standard has been the 30-year fixed-rate mortgage. It's changing. They want to go 40 years now. 40-year fixed-rate mortgage. Now, you'll probably be alive in 40 years. 40 years, I'll be over 100 years old. I don't know if I'll be alive. 40-year mortgages, well, maybe my relatives can pay it off if I went and got a 40-year mortgage right now. 40-year mortgages are trying to make that a norm, once again, to keep the houses propped up. Now, another hit to the housing market. Very fascinating. Wells Fargo Bank, right? Wells Fargo Bank just took away the home equity line of credit. Actually, they took away all lines of credit. Okay, so let's say a lot of people, they don't have cash right now. They're house rich. Yes, their house is rich. It's worth $350,000 for the average, but there's many homes that are worth $1 million. So they're house rich, but they're cash poor. So what do? They take out a line of credit, and they live off the line of credit, knowing that they have this bank over here called their house. Well, this line of credit's just taken away from them. Okay, now, what do they got to do? Well, they have no cash. The cash is in the house. Maybe they're going to sell the house. Now, what's going to unwind the housing market is sellers are getting ready to cash out. But not all the sellers are going to make it. If everybody sold, the market would crash tomorrow. First seller, maybe he makes it out at these prices. But the next one, he's going to have to take a little bit less. The next one, a little bit less. You see, it's a stair step up when the housing market's going up. But when it's going down, it's a stair step down. Now, to get out of your house, you have to you have to get below the last sale price. Because if you're at the last sale price, your house will not get sold. It will not get an offer. It will not get a bid. You have to get below the last price. And this is what brings the home prices down. But now Wells Fargo, they've taken away all these line of credit that people have been living on. So they're going to have to use their house to get the money. And a lot of people are going to sell their house. Now people are upset with Wells Fargo. A lot of people are upset with Wells Fargo. And maybe you switch to a different bank, right? Well, I'm telling you, I think the large banks are going to follow suit. I think Bank of America will pull their lines of credit soon. I think Chase will pull their lines of credit soon. Wells Fargo's just the tip of the iceberg. Now, why are they pulling their line of credit? Let's think about this. Well, Wells Fargo, maybe they see what's going on. Maybe they see that the economy is going to pull back. Maybe they see that house prices are going to pull back and that people have been living on this line of credit that they don't really have cash. And Wells Fargo doesn't want to be the bag holder. They don't want to be stuck holding the bag. So what do? They cancel all lines of credit. It's crazy. Okay, that's just one bank. Look at what Chase is doing. Chase is doing, well, they're sitting on $500 billion in cash because they know that the market's going to come down. They're going to want to buy some of these things. They know that asset prices are too high. They want to come down. Look at these banks. They're smarter now. They were stupid in the great financial crisis. They were the bag holders. They got stuck holding the bag, and a lot of them had to get bailed out with taxpayer money. Our money went and bailed them out. Well, I don't think the taxpayers are going to bail them out this time. Are you going to bail them out? I don't want to bail them out. So they're getting a little bit smart. They go, oh no, we're not going to get bailed out. We better take away these lines of credit from people. And that's going to cause people to sell their house. Now, what's going to unwind the market is greed. People are going to want to get out these high numbers. When they see it starting to drop, they're going to panic and they're just going to sell right now. Plus, we're going to get about 2 million homes. Those forbearance homes are going to be coming onto the market. You'll see now it plays out slow. They have to go through the court system. Courts are going to be backed up with the evictions, the court system's they can't handle it all. The court system, there's going to be too many coming through. So it's going to take some time to play out, but the panic's going to come and you will see what I predict, a depression in the housing market. Now, if you like this stuff, give me the thumbs up. If it depresses you, stop watching, just turn it off. But anyways, if you really like it, hit that subscribe button so we can talk again. I'm Tall Mike. Get out there. Have a great Monday. Bye-bye now.